Hey guys, how's it going? It's Andy from Magoo Investing. Happy Monday. Today I'm going to be revisiting one of my favorite sectors to talk about. Back in, March, April, May, one of my most common video topics was talking about the different airlines out there because there was so much going on. When you can look at the other sectors out there, you have technology, which has just been killing it recently. But the most beaten down sector overall has been the airline stocks. And today I'm going to revisit that sector. And in today's video, I'm going to be talking about the airline industry in depth and kind of explain some of the main things that I'm watching going forward with this sector. And then I'm going to be ranking the 6 airline stocks I wanted to talk about. Today we're going to be talking about American, United, Southwest, Alaska, Delta, and Boeing. And so I'm going to put Boeing in there because while it's a manufacturer, it is a huge mover when it comes to the overall market and is a big player as they're the largest manufacturer of planes in the United States and in the world. And so while there are some other airline stocks out there, specifically JetBlue and Spirit, I just don't have enough information about them or have a strong enough opinion to warrant putting them into this video. So while people may say that they enjoy those stocks, they're not really something that's on my radar very often and is not something that I really want to discuss because I'm not comfortable enough about the topic. Before getting started, I have to say that I'm not a licensed financial advisor and this is not financial advice. Anything you hear in this video is just my own opinions on the airline industry and the stock market as a whole. Also, if you've been enjoying these videos, I really appreciate it. Hit that like and subscribe button as it would help my channel out a lot. With that out of the way, let's start talking about the overall airline industry. All right, so the biggest factor about the airline industry has been the virus, and that's pretty common for pretty much any sector you're talking about. But when it comes to the airline industry, they've been hit arguably the hardest overall. When you look at the numbers, the cases in the United States are spiking significantly. And so this could be a second wave or this could still be the first wave. But we're seeing spikes in the United States and we're not really seeing that in other places of the world. And so based off of the behavior that I've seen, based off of people that I know on Snapchat and Instagram, I'm expecting those cases are not going to be dying down anytime soon. And so one of the big impacts of kind of the behavior of overall Americans has been the restrictions for flights going to the European Union. Based off of the United States' response to the overall pandemic, the European Union decided that they don't want American citizens or American originating flights going to Europe, trying to protect themselves, it makes a lot of sense. And so we did see a lot of pretty funny articles talking about private planes were being flown to places like Italy and they were getting rejected when they got there because they originated in the United States and they had US citizens. So it's the rich don't have to follow all the rules, but apparently they had to follow this one. And so one of the big things that has been happening to the airline industry has been part of the CARES Act, or the $25 billion bailout that the United States government gave to these airlines. One of the things I'm going to be watching going forward is some of the requirements for taking this money from the federal government is that the airlines would restrict their layoffs and their firings overall until October 1st. And so we're not at that date yet, but we're starting to get close. And one of the news stories that came out last week is that Delta was offering early retirement for a lot of their pilots to try to get the workforce to be smaller. And so this was a way for the company to try to get around some of the wording in the CARES Act. If they allow their employees to take early retirement, it's not a layoff and they can still keep the money. But Delta came out and said that they're offering early retirement to a lot of these people, but if they don't take the retirement, they might be laid off on October 1st. So it's kind of like they only have one option to really take that. And so it's going to lower the workforce and it's going to hopefully reduce the surplus of pilots that we're seeing in the United States right now. And so right now the estimates that I'm seeing is that the 250,000 employees in the airline industry, around 30% of them are going to be laid off after October 1st. So that's going to be a huge reduction and we're going to see a large spike in the US unemployment after that day passes. Another important factor from this CARES Act is the restriction on how the companies can be spending their money. I've talked in the past about stock buybacks, and one of the restrictions is that these airlines aren't allowed to do stock buybacks until September of 2021, and they have to limit executive pay until the end of 2022. And so stock buybacks have been a huge part of the airline industry for the past decade. And when I put up this chart right now, it shows a lot of the popular airlines talking about their free cash flow and how much of it they've spent on stock buybacks in the past decade. And so based off of this list, these airlines spent 96% of their overall free cash flow in the past decade on stock buybacks. And my favorite thing to point out is good old American. In the past decade, American has spent $13 billion on stock buybacks, and their overall free cash flow in the past decade was negative $8 billion. So they're spending money that they don't have on stock buybacks to push up their share price artificially. That's one of my least favorite parts about the overall stock market, and it was a video that I went in depth on the risks of stock buybacks overall. And then when you look closer and you kind of summarize how much these companies have been spending on stock buybacks in the past decade, comes out to around $47 billion. And when you look at that number, it seems kind of familiar. Oh, that's because the airlines wanted $50 billion in bailouts from the federal government. And if only these airlines didn't spend almost $50 billion of their free cash flow and they put it into savings instead of artificially inflating their share price. And so this becomes a huge problem when you look at the overall airline industry, is that these companies have been very aggressive when it comes to stock buybacks. And so for the short term, that's very beneficial. It helps the shareholder and it helps the company out a lot because their share price goes up. But when we get to a pandemic that no one can really plan for, these airlines have been put themselves into a tough spot. And then in the past decade, Boeing has been slightly better with around 75% of their free cash flow going towards their stock buybacks and dividends. And now that the airline industry is starting to get more demand for their flights, you're starting to see some discussions on the internet overall about some of the things that these airlines should be doing. When you look at a lot of these airlines, some of them are flying at full capacity. American came out and said that starting July 1st, they were going to be flying at full capacity, and then United has also been doing the same thing. And the only two airlines that have been really limiting their overall capacity has been Delta and Southwest, who are limiting around 2/3 of their overall capacity, with Delta blocking off the middle seat and then Southwest just selling 2/3 of their tickets because they have free seating and they can't just block off that middle row, even though hopefully no one's going to be sitting there anyway. And going in towards the end of the quarter, we're going to be seeing some brutal numbers when it comes from earnings. When I talked in my video about why I was worried about the overall stock market, one of the main topics in that video was the cutting of guidance, which means that investors don't have the inside information from the overall companies to kind of base their estimations for earnings, revenue, stuff like that. So a lot of these investors are flying blind. But based off of how ridiculous we've seen the market been moving overall, I don't expect it to be a huge problem for the airline industry, which has been kind of pushed up a lot on momentum overall. But when we look at a lot of the other sectors that don't have as much momentum and hype behind them, I expect some of these numbers are going to be crushing in the overall stock market. Right now, the expectations are the largest Delta is expected to have a 90% drop in revenue year over year, and they're expected to post a loss of around $4.25 a share, which is a huge drop year over year. All right, so those are some of the main topics that are affecting the airline industry overall. We have the CARES Act starting to wear out, and a lot of these companies are still burning through a lot of cash. There's the moral obligation of blocking off some of the capacity to limit the spread of the virus. You have the ban on travel to the European Union, and then you just have a lot of these stock buyback problems. And so there's a lot of factors that are affecting the overall airline industry, and I wanted to talk about some of my favorite stocks. And in today's video, we're going to be going from my least favorite to my most favorite, just kind of switching things up. And my least favorite stock, big surprise, it is American Airlines, ticker symbol AAL. For anyone that's been around this channel just for a little bit, you know how much I hate American Airlines. They're one of the largest airlines out there, but their financial situation is so poor. When I look at it, they have an incredibly large amount of debt at around $22 billion, and they have a negative shareholder equity, which is not something I really want to be a part of. Also, when we talked about stock buybacks, their free cash flow in the past decade has been negative $8 billion. So when I look at this stock, I don't really see a lot of positives, and I really want to be as far away from the stock as possible. However, when we look at robintrack.net, which is a great way to graph the change in stock price and then look at the popularity on Robinhood, you can see that it has become the second most popular stock on the platform. And while there's definitely some potential for some short-term plays, I do not want to be a part of this stock for a long-term investment. There's just so much risk, and I feel like if any airline is going to be going down, I'm expecting it to be American based off of their poor financial situation. And then the fifth stock on this list, which is going to be my second least favorite, is going to be United, ticker symbol UAL. When I look at the overall airline industry, I just feel like United never really gets talked about. It's usually the bad stuff with American, and then kind of the overall industry news, which is usually tagged along with Delta. When I look at the overall airline industry, I've been seeing a lot of positivity when it comes to some of the top airlines, but when I look at United, I don't see a lot of positive numbers, especially the fact that by the end of 2021, they're still expecting to be having a 14% drop in their revenue, which is not something we're seeing with some of the top airlines. And then another reason is based off of moral grounds for investing. And this is a main reason why I do not invest in biotech and pharmacy stocks, just because I don't love the way that they operate their businesses. And based off the fact that they're running at full capacity, same with American Airlines, it's just a main reason why I don't really want to be a part of this company, because I don't feel morally good about being an investor. And so overall, there's not really anything specific against United that I have, But when I look at the airline industry as a whole, I see a lot of better options, and United is going to be my 5th stock on this list. All right, the 4th stock on this list is going to be Boeing, ticker symbol BA. When you look at Boeing, it is a huge part of the overall stock market, being a part of the Dow Jones 30. It's the 5th highest weighted stock on the Dow Jones, and it's the 2nd largest defense contractor in the United States, and it is one of the largest exporters in the United States. But when you look at the revenue sources for the company, around 50% of their revenue comes from airplanes. And when your biggest and most recent airplane is grounded, that's going to be a huge problem going forward. And so you have the stability of being the 2nd largest defense contractor in the United States, which the government is always going to be spending. You don't have to worry about that as much. But the fact that they're still waiting on their 737 MAX planes to get off the ground is kind of a tough look for the company. And while there has been some news recently about some additional testing going on that may get the 737 MAX planes off the ground, you still have the problem that the demand for new airplanes is pretty much zero at this point. When you look at cancellations for airplane orders, so far there's been around 400 of them so far in 2020, and around 313 of them have been from the 737 MAX planes. So you have your most recent and probably most profitable airplane on the market, and people don't want it anymore. And so there's a lot of airplanes that are just kind of sitting idle waiting for the okay to get back in the air. But until that happens, we're going to be seeing some problems with Boeing going forward. And so far, they've had around 4,000 orders for the 737 MAX planes, and they've only delivered slightly less than 400 of them. So they're only at 10% of their delivery. And there's been a lot of cancellations, and I'm feeling like it's not going to be a great look for the company when things start getting back to normal. I just don't think that the orders are going to be to the 4,000 that they originally had. The reason that Boeing is 4th on this list, even though I talked a lot about doom and gloom, is the fact that they are very stable. And I don't think that Boeing is a company that can be allowed to go bankrupt. It is one of the most important companies when it comes to the stock market and the US economy. And the fact that they're probably the only plane manufacturer or large plane manufacturer in the United States, there's no way that the US government is going to let them fail. And so that's why I'm going to put them as 4th on this list based off of the stability of that. But right now I'm expecting to see some short-term chop before we see things get back to normal for Boeing and back up to the $400 price range that they were in the past year. All right, the 3rd stock on this list is going to be Alaska, which is ticker symbol ALK. This has not really been a stock that I've talked that much about on this channel, but I wanted to put it on this list because I see a lot of positives, and also it's a regional carrier for the Pacific Northwest, which is where I'm currently living, and so I have a lot of respect and I really enjoy the times that I've been flying Alaska. At the beginning of the pandemic, you saw some crazy numbers about how much money the airlines were going to be burning through, and Alaska has been pretty much the same with that. But I've been seeing a lot of articles talking about the airline expects to get that to a break even by the end of the year, which is not really something that we've seen with a lot of the airlines. And so I see this as a smaller regional carrier, and which I think is beneficial because you have these shorter routes and you have a lot of focus on business travel, which is what I've seen a couple of times that I've flown on Alaska. When you look at the fundamentals for the company, they have only $3.9 billion in long-term debt, and most of that is tied up in airline leases. And based off of their acquisition of Virgin America in the past couple years, a lot of that money in long-term debt is going to be coming off the books as those leases are set to expire finally. And so I see a very healthy balance sheet for the company overall. I like the focus on domestic flights and the regional capacity and how strong it is in the Pacific Northwest. And so this isn't going to be a stock that's going to be talked about a lot based off of the fact it doesn't do a lot of international or flights onto the East Coast. But I think it has a lot of safety based off of the business that they run. And that's why I'm going to put Alaska, ticker symbol ALK, as my 3rd favorite airline stock to buy in July of 2020. All right, my 2nd favorite airline stock to buy right now is Delta, ticker symbol DAL. A couple months ago, this was my favorite airline overall, but things have changed since then. And so as more information comes out, I think it's important to be able to change your opinions on different stocks, and that's what I've done here. Delta is the largest airline in the world, and I thought that was a really beneficial thing at the very beginning. I was expecting that the virus was going to be hitting places around the world at kind of the same rate. But obviously I was wrong about that, as the United States has surging cases and places around the world are doing a lot better. And the fact that Delta relies heavily on international travel, which has the highest margins for those flights, is going to be hurting the company overall. You're seeing some of the numbers about an expected 90% drop in revenue in the next quarter, which is going to be brutal. But for the long term, I think this is going to be the most resilient stock overall when it comes to the major airlines, when I'm talking about American and United. I also really like the fact that they are flying at reduced capacity, which is going to be hurting their bottom line overall, but I think based off of moral grounds, I like that a lot. There's been a lot of talks about the layoffs that are going to be happening after October 1st, which is going to be a cost-cutting measure, but it does not feel that great overall. The airline industry is in a tough spot, and the fact that they're having to cut a lot of pilots makes a lot of sense, even though it does not make me happy. When I look at the overall airline industry, I've been seeing a lot of optimism about Delta overall, based off the fact that they have incredible operating margins. Also, there's been a lot of optimism that the stock is going to be able to get back into the positives for their net cash flow by the end of 2020 or early 2021, which is not something that we've seen with stuff like American and United. And so that's why I'm going to put this major carrier in Delta as my second favorite stock to buy. And the only one left on this list is Southwest, ticker symbol LUV. This was one of these stocks that I think I had as my second or third favorite airline a couple months ago. But based off of the travel ban in the EU and the business that Southwest operates, I think it's going to be the best bet going forward. When I look for a stock right now, I'm looking for simplicity, and I think Southwest kind of embodies that the best out of this airline industry. They fly the same planes overall, which lowers costs, and they have a pretty good operating margin, just slightly below Delta overall. And overall, Southwest is able to fly pretty much all the routes that they want to. And based off the fact that they're mainly domestic and they have these shorter routes, I think people are going to be more likely to be booking flights with Southwest compared to these more expensive carriers. Also, the fact that price, I think, is going to be a huge factor going forward as we're likely to hit a recession in the near future. I think people that have been kind of putting off their travel as a result of the pandemic will be looking for the cheapest option, and that would be Southwest most likely. Southwest did have some recent news as they are the biggest customer of Boeing for the 737 MAX planes, and they have the largest fleet at this point, over 30 planes just kind of sitting and waiting. And so when Boeing announced that they're having tests on their 737 MAX planes, Southwest stock went up around 7.5% based off of that news. So based off the numbers I could see, Southwest is currently parking 33 of those 737 MAX planes, with 27 orders still waiting to be filled. And so that's going to be a great thing for the airline when Boeing can get back and get these flights off the ground. But at this point, there's a lot of positives when I look at the overall fundamentals of this company, based off of the fact that they have the lowest long-term debt-to-equity ratio out of any of the airlines. Currently, this debt-to-equity ratio was below 0.4 when we're seeing some incredibly high long-term debt for a lot of these airlines as they're trying to protect themselves in the short term and they're damaging their long-term safety of the company. So overall, when I'm looking at the airline industry right now, I'm looking for safety, and I'd happily pick a stock that I think is safer, but doesn't have as much potential upside. And that's why Southwest, ticker symbol LUV, is going to be my favorite airline stock to buy for July of 2020. So overall, that was my discussion on the airline industry as a whole, kind of talking about the major news stories that are affecting them, and then ranking the 6 airline stocks that I wanted to talk about, the 5 airlines, and then Boeing. And so overall, my least favorite is American, and my 2 top ones, which I would consider buying again, would be Delta and Southwest. I'm very curious what you guys have to say about the airline industry as a whole, and what your favorite airline stocks are. Let me know in the comment section down below. Thanks for watching this video, wear a mask, and I'll see you on Wednesday.